Welcome to Value Vest Daily, where we deep dive into the best value and momentum investment opportunities. Today, we're looking at a really fascinating company sitting right at the crossroads of space-age tech and digital currency. It's called KULR Technology Group. The big question is, could this NASA-backed innovator be a potential 10x moonshot, especially with its unique Bitcoin twist? Let's find out. So we've broken this down into 5 key parts to give you the full story. We're going to start with their core tech, which was born from a partnership with NASA. Then we'll dive into the financials of the company. After that, we'll explore their really unique Bitcoin Treasury strategy. Then we'll look at the charts and what analysts are saying. And finally, we'll weigh the risks against those potential rewards.
All right, first up, let's get to the core of what KULR actually does. They're solving a problem that is becoming more and more critical every single day as, the whole world goes electric. Think about it. As we rely more on EVs, these massive energy storage systems, and all of our personal gadgets, we're also taking on a huge hidden risk. All of this amazing technology is powered by lithium-ion batteries, and while they're incredible, they do have one very dangerous flaw. And that flaw is called thermal runaway. You can think of it like a catastrophic domino effect. One tiny little battery cell overheats, maybe it catches fire, and it triggers this violent chain reaction that causes the entire battery pack to just explode. The stakes here are incredibly high, especially when you're talking about things like space missions or electric airplanes.
And this, right here, is where KULR comes in. Their core tech, the Thermal Runaway Shield, was actually developed with NASA. The best way to picture it is like wrapping each individual battery cell in its own tiny high-tech fire blanket. So if one cell fails, that little blanket contains all the heat and stops the chain reaction dead in its tracks. And look, this isn't just some theory. This technology has been proven in the harshest environments you can possibly imagine, from the International Space Station to the Mars rover.
Okay, so the tech is clearly mission critical and it's been battle tested. But what about the company itself? What about the business? Let's shift gears to the fundamentals and see how this all stacks up as a potential investment. So at a glance, KULR is what you call a microcap company with a market cap of around $108 million. Now, you're going to notice the PE ratios and the return on equity are negative. That's pretty typical for a company that's in a super high growth phase. They're basically reinvesting every dollar they make back into the business instead of taking profits. But there's a number here that tells a much bigger story, that debt to equity ratio. And speaking of growth, this is the number that really just jumps off the page. KULR's revenue is showing some serious momentum. We're talking Q3 revenue up a staggering 116% year over year. This kind of explosive growth isn't just a nice number. It shows their technology is in high demand, and they're really starting to gain some major market traction.
Which brings us back to that near-zero debt-to-equity ratio. This is such a critical point for any growth company. It means KULR has an incredibly strong balance sheet. They are funding this massive expansion without taking on a bunch of burdensome debt, and that gives them huge flexibility, and honestly, it significantly reduces risk for investors. Now let's talk about who owns the company. About 20% is held by institutions, and that number is growing as more and more funds are taking notice of what they're doing. But what's really compelling here is the high insider ownership, especially by the CEO, Michael Moe. This means the leadership's interests are deeply aligned with shareholders. Simply put, they win when you win. All right, we've covered the space-age tech, we've covered the strong fundamentals. Now let's get to the part of the story that makes KULR unlike almost any other tech company you've probably heard of. KULR recently adopted what they're calling a Bitcoin plus Treasury strategy. What does that mean? It means they're converting a huge portion of their extra cash right into Bitcoin. So they aren't just a battery tech company anymore. They are now this hybrid, holding hundreds of BTC right on their balance sheet. This gives investors exposure to 2 things at once: a high-growth tech sector and a premier digital asset. And this slide really shows how they're building out a whole ecosystem. They're not just buying Bitcoin. They're getting into sustainable Bitcoin mining. At the same time, they're making these key partnerships with advanced battery makers like Amprius. They're expanding into AI robotics with German Bionic, and they're deepening their very lucrative work with the US Army. These are all powerful, interconnected catalysts for growth. So, what we have here is a very unique company with a really compelling story. But what does the market think? Let's jump into the charts and see what analysts are actually projecting for the stock's future.
Okay, from a technical standpoint, the stock has been in a bit of a short-term bearish trend, but it's holding some really important support levels. The key levels you're going to want to watch are the support zone right around $2 and then the resistance near 330. If we see a decisive break above that resistance, that could signal a whole new upward trend.
Now, this is where it starts to get really exciting. Despite the recent price action, the average analyst price target for the next 12 months is around $10. That's not just some random number. It's based on their projected revenue growth and the impact of all these new partnerships. That represents a potential upside of over 300% from where it's trading right now.
Looking out 3 years, the speculative price targets get even more optimistic. A price of over $50 is considered possible. Now, for that to happen, KULR would need to successfully scale its operations, capture a big chunk of the battery safety market, and of course, benefit from a rising Bitcoin price over that time.
And in a best-case blue sky scenario over 5 years or more, some people see a path to over $100 per share. This would happen if KULR becomes the undisputed gold standard for battery safety and their Bitcoin strategy just pays off massively. We're talking a potential market cap in the $1 to $5 billion range by 2030.
So, what does all this mean for you, the investor? Let's put it in real terms. Based on these analyst targets, a $10,000 investment today could potentially grow to $40,000 in the short term and maybe upwards of $160,000 or even more in the long term. But of course, any opportunity with that kind of crazy upside doesn't come without risk. It is absolutely essential to have a balanced view. So let's wrap this up by weighing those potential rewards against the very real risks.
On the risk side of the equation, you have potential share dilution, as the company will likely raise more capital to fund its growth. The stock's value is also going to be tied, for better or worse, to Bitcoin's volatility. And hey, it's a small company, so there's always execution risk. But the rewards are asymmetric. You have the chance to be a market leader in a critical safety sector, the massive upside from their Bitcoin holdings, and that continued growth from major NASA and defense contracts. This is the definition of a high-risk, high-reward play. And as always, please remember, this is not financial advice. This analysis is for informational purposes only, and you should always do your own research before making any investment decisions.
Please subscribe, like, and share Value Vest Daily for learning totally unbiased daily opportunities before you put your money to work. Hey, one more thing. Please put in a comment if you want us to deep dive into any specific ticker symbol. Thanks for watching, and we'll see you the next time.